Hello, thank you so much for attending this video presentation. This is Seewing Yi from the Yi Real Estate Network, and my special guest is Mr. Caleb Kanazi of Buffalo Turnkey. Welcome, Caleb. Thank you for attending. Can you hear me, Caleb?
Yeah, it's good to be here.
Okay, well, I think the audio and okay.
Yeah. Oh yeah, it's I was just saying your the internet connection is low, yeah.
All right, okay, let's do the best we can. Anyway, the purpose of this presentation is to because there's so many changes that's going on in the real estate market. I thought I invite Caleb to go over some highlights of what's going on. So this is a very good timely scenario to discuss several things. So as you all know, my network has been working with Buffalo Turnkey for a number of years now, and to buy properties, turnkey cash flow properties in the Buffalo Niagara Falls area through the unique system that Caleb Kanazi and his team has. So we've been doing very well with your portfolio in the market. So we will continue to motivate our investors to look into your market in order to diversify their real estate investment portfolio. So again, this short 15-minute video, I'm going to ask Caleb a few questions. As you all know, here what's going on with the highlight of what's going on in the market. We are seeing a tremendous reset in the real estate market. Some people may call it correction or whatever, but not to me. I still feel that the real estate market is still doing very well. There's a lot of opportunities as long as you know, as long as you can dispel the facts from fiction. Meaning, right now we're still having very low supply of homes nationwide, and the demand is very strong, even though the mortgage interest rate has increased from around 3% last year to as high as 6% this year. So real dramatic increase in interest rate. So that really affected a lot of primary home buyers throughout the nation. And what we see right now is that there's a lot of pullback around home purchasing. But as real estate investors, you know, we sort of we think differently, right? We always find opportunities out there to add to our portfolio. So Caleb, in other part of the market, you know, we're seeing some markets where prices have gone down just a little bit. I mean, but at the same time, that's to be expected, right? And there's right now there's more inventory in many markets and less demand because many primary home buyers they cannot afford to buy anymore due to the higher skyrocketing of home prices in the past 2 years during the pandemic, and higher interest rates. A lot of people cannot afford to buy anymore, primary home buyers. But for real estate investors, like I said, it's a little bit different ball game. I mean, because real estate investors, all they need is 20 to 25% down payment. If you can find in a market, in a property that will produce positive cash flow with 20 to 25% down payment and long-term growth, that's a right now is a good time to pull the trigger, especially when a real estate investor, you're buying a property more than your cash flow. You're buying property for appreciation, for tax benefits, for the tenants paying down your mortgages, right? And for multiple factors. So with that in mind, so Caleb, can you share with me what's going on with the local Buffalo market in terms of supply versus demand? Or there are any kind of pullbacks in terms of decreasing prices or any kind of challenges that I know every market is different, but investors need to know, people need to know that every real estate market is different. You know, there's real estate is local, right? Every market in the country is different. There are more than 400 MSA. That means metropolitan, statistical, areas, right? There are 400 areas. So every area have their own unique economic local characteristics, and Buffalo Niagara Falls are no different. So Caleb, can you share with the rest of the audience what's going on with the Buffalo Niagara Falls market in light of what's going on nationwide? And secondly, why do you feel out-of-state risk investors should continue to buy investment properties in your market?
Sure, yeah. So yeah, as you said, the real estate markets, they are local. And sometimes not only they're very local, like some areas are hotter than others. Even here, like on the west side is crazy hot right now. Whereas other areas might not be as hot. But there also do fall a trend, which is with the federal government raising interest rates. Like a week ago, they just raised it again, 0.75%. So that does affect the market, but it hasn't really slowed it down or decreased prices here. It's more, you do get buyers to get priced out now, because the 0.75%, it does make a difference to a lot of people, but people are still going to need homes, and people and the cost of building homes is very, very expensive right now. Like to build a new house, it's like $300,000 just for a standard size house here, and the building materials, everything has gone up, as you've probably seen. Also in the reason why the Fed is raising these interest rates is because they want to stop and curb inflation a little bit. And real estate is historically a really, really great way to protect yourself against inflation. And that's why I feel that it's still a good to buy in real estate. And I do put my money where my mouth is. I mean, basically all my money is in real estate too. Like it's a good business to be in. A good way to invest. I mean, I'm not a big fan of the stock market. I think that has gone up a lot, and real estate is good, especially here, because here historically we're getting good cash flow. Other markets, a lot of times they depend on appreciation, which appreciation you don't really is a little bit less of a guarantee, in my opinion, since you're just kind of ebbing and flowing with the market. Whereas with cash flow, you're collecting rents, and rents typically do not go down even when houses go down, because they lag a lot, and people just continue to pay what they can afford. So when it goes down, you're not really decreasing rents. You're generally only, when you re-rent a property, you might negotiate a little bit lower of rent. But when you have a tenant already in place, you're not just going to send them a notice to say, oh, by the way, we're decreasing your rent or something. So it's typically a pretty good way, even if you are a little bit hesitant with the market. But right now, right here, it's still very much so a seller's market. We are seeing less buyers, but we're still seeing quite a bit of buyers, because people have still not met that demand, because there still are record low number of inventory here, and still across the country. But we are seeing it slowing down, and I do anticipate. I mean, it can't just continue going crazy high for forever, but that doesn't mean that we're going for a bubble. But it's very hard to tell. You get expert opinions on both sides. I still think real estate, especially here, is a great investment.
Caleb, I mean, that's a tremendous recap. I could not have agreed with you more. So, and one thing that is great about your market, that's why investors should focus in your market quite a bit, is because, let's say, the off-market properties that you promoting to out-of-state investors for many, many years now. Let's say, for sake of discussion, the average price of a rental property that you are offering to our investors, let's say it's $100,000, right? And he rents for $1,300. So we're talking about a rent to value ratio of 1.2, 1.3. we're talking about capitalization rate of 7 to 8%, and cash on cash return on 25% down payment around 10 to 15%, right? And if we add on, projection of 5% appreciation for the future, we don't know. If we add all that up, the total return on investment is double digit, 20, 30%. Now, think about it. $100,000 single family home or duplex in your portfolio that you've been promoting, whether a single family home or duplex or triplex, does not matter. I'm using an example. At 3.5% interest rate a year and a half ago, at 25% down payment, an investor will probably cash flow around $500 last year and the year before. Those days are gone. Today, investment loan rate at mortgage rate around 6%, maybe slightly higher. As of today, we're talking August 2022. Even under the same purchase scenario of $100,000 property that rents for $1,200 in your portfolio, in your market, even at a 6.2% interest rate, mortgage rate, at 25% down payment, okay, the cash flow is not $600 monthly. Net cash flow is maybe $350. Is this a major red flag? I don't think so, right? I would still buy even a 6.5%, right, interest rate right now. You know why I say that? You still cash flow. The rent is projected to go up. You are collecting rents, cash flow monthly. You're collecting high equity appreciation, 5% or more in the future. Your tenant is paying down your mortgage systematically. You're getting tax benefits. So if I were an investor, if I look into any other market, in particular your portfolio market, even a slightly lower cash flow, that's not going to impede me from buying right now. You know why? One more thing. Do you agree in the next few years, if the inflation is stabilized, if the Fed stop raising rates, we have to be logical and reasonable. You know the Fed can lower the interest rate eventually. We don't have to the ball. Oops. You okay? Caleb, can you hear me? We lost connection. Caleb,
Yeah, sorry. It looked like it might I lost internet connection with this. Well, not internet connection, but connection to the Zoom.
Yeah.
Can you hear me?
Yeah, I can hear you. So you can hear me right now?
Yeah.
Right.
It's just for some reason the connection to Zoom is laggy.
Yeah, I don't know why. Maybe you can check it later. Anyway, let me conclude this. So even we buy at a slightly lower cash flow because of the higher interest rate, investors still should pull the trigger in the market. You know why? Because in the next 1 to 2 years, the interest rate is going to be lower. It has to. Otherwise, the economy is going to crash. Otherwise, the housing market is going to crash if the interest rate or anything higher than 6%, right? I'm sure you agree. So if the interest rate, investor buy now at your market because your price is so low compared to the other housing market in the other part of the country where investors have to pay 3 times more than you, right? Than your market. So investor buy right now at the assumed interest rate of 6%, whatever right now, then and get a slightly lower cash flow. Then in about a year, 2 years, 3 years down the road, when the interest rate improves to 5% or 4.5%, then the investor will do what at that time? Refinance, right? They refinance, and then the cash flow will go back to normal or much higher. So you hear me? What I just concluded? I know it's kind of long verbal.
Unfortunately, I missed a chunk of it due to the internet connection. But yeah, I was able to hear the most of it.
Yeah. Okay. Let me recap. Buy now at a typical property you're offering, like whatever, 60 to 100 grand, because the difference between 6% interest rate right now and 4% is only a little bit. It's not, it's not a lot. It's so buy now for slightly lower cash flow on your low purchase price in your market. Then, a couple of years later, when the interest rates decrease, then investor can refinance that loan to have a lower payment. So you cash flow better in the future. So that is the strategy for savvy real estate investors. Am I right or wrong?
I wouldn't agree with it completely, because historically, even at the interest rates that right now, the interest rates are pretty good. Right now, the Fed rate is 2.5%. On average, and for the past 50 years, it's 5.5%. So we're still looking at, like, if you're just looking at historically, the interest rates that we're paying is still very, very low. So even if it does increase, then you're better off buying now, because you're going to have, because if the Fed they do anticipate to raise it at least in the future a few more times. He is looking to increase in steps. So if you do get it now, if you buy now, essentially you're locking yourself in for probably a better interest rate than the future. Before, it would have just been like a few years ago, it was they were keeping it at incredibly low at like 0.25%. Like it was basically insanity low, if you're looking at it from a historic perspective. But then again, we don't really know what's going to happen, and you very well could be right that the interest rates are going to go back down again, and then which case you can always refinance. Or if you're buying it now and the interest rates do continue to go up, well, now you got a better interest rate. So there's different advantages to that.
Absolutely, yeah, Caleb. So yeah, my philosophy is, I'm sure your philosophy is, buy real estate and wait instead of wait to buy real estate. So do not stay in the sideline, because if people waiting the sideline, they've been waiting forever. If people have been waiting for a crash or a bubble, they might be waiting forever. So having said that, Caleb, I know your time is busy. So from a big picture perspective, the real estate portfolio that you're promoting, which is off market, because you guys buy those properties from your own money and you rehab it with your own money at a discount, and you sell your portfolio of off market cash flow properties to out-of-state investors. So tell me, what's the value add of buying houses through your network, through your system? Oops! Oh my gosh! Can you hear me? Oh, we got weak connection again.
Yeah, I'm not sure why Zoom keeps crashing for me, so I'm not sure what's going on with that. It says I have full bars of internet. It's just Zoom keeps crashing.
Yeah. Probably the Zoom, the company Zoom is a problem. It's not your connection. So yeah, Did you hear my comment? Did you hear my question?
Unfortunately, I missed some of it. If so,
no problem. Let me pose this question again. So at this current moment, what is the given the changes of what's going on in the real estate market, and there has been a lot of changes, which we went over briefly. So what is the value add perspective of real estate investors, out-of-state investors, to buy in your market? I know in your market you're selling older homes. Your prices are a lot cheaper. At the same time, you have a very good rent to value ratio, very good cap rates. So from your perspective, why real estate investors continue to buy in your market even with the current economic situation? So what's the value add associated working with your company?
yeah, sure. I mean, you kind of named it there a little bit. It's really just the cash flow that you could get off of these properties. I mean, Buffalo. I mean, if you just look up cities with some of the best cash flow, Buffalo will certainly come up. And Buffalo, some of these other areas that have cash flow too, like they're like Detroit and Cleveland are ones that people tend to like. We went there for ourselves too to see if we wanted to kind of expand and go there. We were very unimpressed, needless to say, with the other cities. As far as what we've checked out, at least Buffalo is kind of the best that we've seen for cash flow. Some people want to buy for appreciation too, so that might be other areas. But for here, and I've always been of the opinion that cash flow is kind of king. That is what that is the excellent choice to buy in Buffalo and kind of Niagara counties here.
Well, Caleb, I agree with you. Of course, I will continue to promote your market like we have been. To be honest, in the past years, I have networked with other Midwest markets similar to Buffalo, like Cleveland, Detroit, St. Louis, Missouri, Memphis, Tennessee, over the years. And their markets are nothing close to what you guys are providing. They lack the service. They do not rehab the properties correctly. They overprice their properties. Their property management, they kind of scam the out-of-state investors. So they are not very reputable, those turnkey providers in other Midwest markets. So over the years, I have warned my other investors, just because the Midwest market had much better cash flow, it does not mean you could go to other markets and pull the trigger, because you don't know those turnkey providers, right? And they don't have a track record. You guys, correct me if I'm wrong, I've been working with you for a number of years now. You guys are entrenched in your market for decades, because your father started your company in Buffalo, Niagara Falls decades ago, even before you were born, probably.
Yeah, before I was born, yes. He's been doing real estate a very long time, yes.
Yeah, so you guys know your market. You guys know your neighborhood, know the specific address of Niagara Falls and Buffalo. So you guys buy those property from the distressed houses, fix it up with your own rehab team, and make it turnkey. And you guys purchase your rehab materials at a huge discount from the local hardware stores, and you pass on the savings to our out-of-state investors and make it turnkey. You have everything is one-stop shop, property management, the rehab team, inspection team, everything is under one roof. And so what more can you ask for? You guys been around for decades, so correct me if I'm wrong. Okay, so am I right?
Yeah, pretty much. Except what we mostly buy actually from Home Depot. There's Home Depot stores in this area. There's 9 in this area, and we're their second largest customer. So they're always giving us great discounts at the Pro Desk. So
your portfolios every month, you have a fairly large portfolio, like 50 properties in Buffalo and 30, almost 100 properties available in any given moment. I see your spreadsheet, I see your inventory every month, but you have buyers over the years consistently from overseas, Middle East, from out of the other areas of the country, and from all across the country. They come into your network, they come into your product, your company. They buy, they have a good experience, they're gonna buy more. Repeat business. You guys do no marketing, am I right? You guys get repeat business from existing clientels and referrals over the years. Is that true or false?
Yeah, pretty much. So the marketing for selling, we do practically none for selling, but for buying, we're always looking to buy more properties. So we do quite a bit for buying properties, but for selling, like basically we don't sell properties. They just sell themselves with the numbers.
So what does the inspector expect when they buy property through your network, through the Buffalo Turnkey? in the next 1 year, the next 3 years, the next 5 years, the next 10 years or longer, what is the expectation? What I'm asking is, what is the investor expectation with the maintenance, with the vacancy factors, with any stress associated with buying with your properties? Tell me, be a little bit more transparent. What is the expectation for investors, and what is the actual experience from your past history of working with out-of-state investors?
Okay, yeah. So the expectation, depending on what you mean by that exactly, is to make money, I guess. And the people who have bought from us have made. Most of them have made quite a bit of money, especially because the real estate market has gone up quite a bit. And two, I think I even mentioned to you before that we like a couple of guys like almost like flipped properties. So like they just buy them from us and then just like sell them from like more. But well, yeah. So later on, like a few months down the road too, pretty much. So but yeah, if you're talking long term, they are gonna have some work to do to the properties, but the properties that you do work to, they're in better condition, they're worth more. Properties go up in value. You're not gonna be going down in value within 15 years, even if we do have, like, say in 10 years there's like a dip and then it just goes up again. It's a little bit of a cycle that you see, and with basically all markets. But if you're holding on to your property and you just like kind of stick out that cycle, and you should be pretty good and overall come out profitable, especially with cash flow properties. You're making money off of your money that way with rents.
Yep, good answer. I mean, very satisfactory, transparent answer. Thank you, Caleb. I only have 5 more minutes to ask you some questions, and of course, I'm trying to be a little bit blunt because my investor asked me these kind of questions, so I'm just
sure, yeah.
Pass on the message, and I'm sure you're very confident in answering these questions because you guys did such a great job. So, okay, let's use a scenario where an investor buy 3 or 5 properties from your company. I mean, from year to year, month to month. I know you guys do a turnkey approach. You guys have in-house property management, family members running that portion of the company. But somebody buying from out of state, 2,000 miles away or 5,000 miles away, coming to your market, buying remotely. If they have a 3 to 5 property portfolio they bought from you guys, how much time and effort an out-of-state investor need to spend to potentially so-called manage the portfolio in your market?
Virtually none. That's the one thing that we like to do is we try to make it as hands-off as possible for investors. So it's just really a passive investor. If you use our management company, we'll literally handle everything. You never have to talk to the tenants, never have to talk about maintenance or anything. Every once in a while, you might receive an email where you got to respond to it, I guess. But besides that, you're pretty much we're trying to make it as passive as possible. Every month you'll get your income and expense statement, and then you'll just check your bank account, and boom, the money's in there. So we really try to make it just as passive as just like investing essentially in the stock market or something. But instead, the stock market, you get these tangible assets.
Well, Caleb, sounds too good to be true, but it is true. Anyway, it's always a pleasure. And as we conclude this presentation, Caleb, it's a pleasure to working with you. I never for one moment that I lost confidence in working with your company, to be honest with you, because some investors thinking, oh, these are older properties, they think this, all the rehab maintenance costs and vacancy will eat up all the profit. Not true, not really true. So until they work with you, until my investors or any investors until they consult with you, your job is to, help investors of out of state go through the purchase cycle from beginning to the end and beyond closing of the escrow. Yourself and your team will continue to manage the investor's portfolio. Does not matter the physical location of the investors. So as we conclude, anything do you wish to add before we sign off?
No, that pretty much does it.
Good. Very good, Caleb. Thank you so much. Caleb Kanazi from Buffalo Turnkey. Thank you for all of you watching. I will see you on the other side. This is Seewing from the Year Reason Network. Thank you very much. Have a nice day. Bye-bye.
Thanks. Bye-bye.